Okay, so we're here with another monthly market report using the Habitat data platform. It's a data analytics platform basically that uses TRREB data to visualize what we're seeing happening in real time in the Toronto real estate market. My name is Daniel Foch. I'm a real estate broker, joined here by Jeff Nader, who is the lead data scientist at the Habitat.
Yeah, that works.
So if you want to, just pull up a screen share here, and we can get started sort of on this review of a rapidly changing market.
Yeah, for sure. And for anyone watching, if you're a realtor in the GTA, interested in playing around with the interactive charts that we're showing on the screen, if you go to the habitat.com/GTA promo, for the next 15 days, we're offering 50% off when you sign up for an annual membership. So definitely check that out, or reach out to myself at contact@thehabitat.com if you're interested.
Awesome.
So getting to the platform here, I know you've already posted a few charts about this on Twitter, and obviously it's something I think a lot of people are anticipating with the rate hikes, but I think a lot of people maybe didn't expect prices to come down so quickly. So
yeah, I think that's an interesting note, right? Like it seems that the GTA is really evolving as almost a more sophisticated market where you have these forward-looking responses to the rate hike environment. Like, the stock market, we know that they price in, people say price in rate hikes by adjusting the prices down sort of early, right? It seems like, at least in the GTA, the real estate market's doing the same thing. So it's almost like reflective of that commoditization of real estate, the financialization of real estate that we've evolved at, but also the sophistication level of the consumer, and the fact that this is really our primary asset class in the GTA now. What does this chart tell us?
Yeah, we're looking at the average sale price for across all the main property types. So townhomes, condos, condo townhomes, detached and semis. We're seeing, across the board since like the February peak here, just declines regardless of the property type.
Right.
And then maybe jumping over to a second view here. Now we're going to compare by the different regions within the GTA. In this case, it's a little different. Most of the regions are down. Toronto has still been holding fairly steady, even since the February peak. So yeah, a lot of significant price declines across property types and regions so far.
Yeah. And now, returning to sort of a blend of those two charts that you just showed, like if you were to pull out and go to detached only in these same markets, I imagine that Toronto will demonstrate that it's down as well, because it's evident that condos are actually propping up the house price, or the total value. I think Toronto from February, which is sort of the peak of the market, we all know this now in hindsight, is actually up on average across all asset types from February until May. So present day, it's up about 1%. Whereas, if you pull out condos and go to freehold only, or in this case, detached only, it's obviously down since the peak. I'm curious, actually, if you can go back to that last chart and across all asset types, we can just look at Toronto, because I'm curious to see exactly what those individual charts look like.
So in the lower tier, right, like for condo apartments, overall, like fairly steady. Condo townhomes,
I guess it's interesting. You'd almost need to break this out into volume over different percentiles to see, like, because what you'll often see is more and more activity in a certain end of the market that can actually skew. So you get a composition mix, right? But I'm interested to actually diagnose exactly why that's happening.
Right.
Yeah.
I think it's interesting as well if we go to look at the leases. Not quite seeing the same trend as sales, right? We're actually seeing, average lease price pick up in recent months across property types.
Yeah, for sure. Yeah. And I mean, there is, as you can see, sort of in the past, there is a bit of a cyclicality element to that, but you can, like, it's totally evident. You can feel it on the ground that the lease market is really just totally fired up right now. A lot of that is a result of rate hikes impact consumers who are at the price floor. And as they get pushed into, or, they get, the capital cost pushes them out of ownership. Now they're ending up in sort of the more top end of rental, right? They're not competing with people who are, committed to being lifetime tenants, who maybe never wanted ownership, who maybe didn't believe in ownership. And so what that does is it creates like a pressure at the top to pull rents up. As you start to get more and more competitiveness in the rental market, the prices rise, right? So a lot of people think, oh, rental rates are going to be, they should sort of follow what prices are doing. It's actually kind of the opposite, especially if it's interest rates driving prices.
Yeah, and talking about competitiveness for leases, right? We're seeing like the percentage of leases going above the asking price has been shooting up in the recent months.
Mm-hmm.
So,
right.
On the sales side, it's pretty common to see, a significant percentage going above the ask price. Typically for leases, that's not really the case. I mean,
Mm-hmm.
sometimes in, the fall market that can happen.
Yeah.
Now,
so
yeah,
it's actually really interesting.
Not too. Yeah.
Yeah, if you look at that July, August, September 2021. So the reason you see that huge boost, and this could be a similar reason as to why we're seeing it happening right now, is one of the big targets with immigration. If you kind of rewind to where Canada retooled their immigration to try and focus on students, because basically they were having challenges integrating the degree systems of a lot of immigrants. So, you'd get doctors come here and they couldn't practice properly, or engineers come here and they couldn't practice. So we started our immigration program focusing on students. And so, and COVID obviously created a lot of problems for that. University campuses were shut down. They were more heavily restricted. And when they started to reopen, after that sort of 2-year lull, it was in the fall of last year. So almost a year ago today, in the summer, that's when you start to see that demand for student housing ramp up. And I remember sort of your August, September, October of last year was just absolute madness in the rental market in Toronto, especially for condos. And I think you're starting to see that a similar effect happen in the same product right now. So I would imagine that cyclical jump that you see might normalize a little bit. And I think the fact that we're probably heading into a recession could put a little bit of downward pressure on rents. But just to create some context as to why you're seeing that huge jump last fall, it's that rush back into student rentals as universities reopened in Toronto.
Yeah, completely. And yeah, if we even narrow this down to just condo apartments, basically the same trend. Yeah, but a bit steeper.
Mm-hmm.
So let's take a look at the sales. So opposite trend here. Obviously, with 60% of sales still going above the asking price, that's a bit higher than historical average, but it's come down significantly from when it was at 82%, 83% in February, March. So a lot less competitiveness. And here we're just looking at Toronto. Maybe I'll just deselect this. So yeah, down from across the GTA,
almost
down from 88%. Yeah, down to 58. So I guess
and maybe can you? Sorry. Can you pull that for York Region? And York, to me, it's interesting because this shows me, like, I would use this to sort of measure the success rate of bidding wars, right? And so I think what we're seeing is the bidding war strategy is going away, and part of that is because we're in downward price discovery and rates are suppressing price. But the other part is that eventually consumers catch on, right? And I think this goes along with what you're about to ask me is, like, how do you properly navigate a market in which price expectation is unclear, right? And I think now we're starting to migrate towards a clearer price expectation on the sell side. And I guess on the buy side, sort of, if your thought process is, how do you navigate it? It's like, you just have to be, unfortunately, you have to be putting in the work, right? You have to be going to look at a lot of properties. You have to be putting out offers on a lot of properties. These are kind of the only things that really are going to eventually get you a place, right? You sort of have this gap between sellers who understand new pricing, and then that gap is a lot of it's an information gap in just the way they're being advised. Like, is there realtor giving them the right advice, right? But you have probably half, or as evidenced by this, maybe 60% of sellers who are still underpricing, and 40% of sellers in the market who are market pricing. And so if you're a buyer, you're going out and you're looking at two houses and there's a $400,000 spread between them, you really have no idea what to expect either of those will transact at, right? And so I think good advisory and getting out and touching and feeling and understanding the products and seeing those differences in real time is really the only way you can properly parse in a market like this.
Yeah, like what are the, I guess, key questions a buyer should be asking like their agent, like when they're trying to navigate this?
I think that, if you, for every house you're looking at, the big question is, what is the most direct comparison, the most recent direct comp that I can use to create a value for this. And then I wouldn't even be offering at the most recent comp. I'd be offering below it, right? But a lot of people are rushing to get a deal done, and a lot of agents are rushing to get a deal done, right? So that's one of the challenges that we have as well.
Yeah. And then just jumping over, so they were looking at the percentage of sales going above the asking price.
Yeah.
If we look at this chart, we can understand, if they're above asking price, like what is the average sale to list price ratio?
Right.
So we can see that's dropped from peak of about 116% down to 106%. So
right.
On average, still overall above the asking price, right? But not by nearly as much as it has been in the past.
Yeah. So you're definitely seeing right now a decrease in not only the success rate of bidding wars, but also, like you're saying, a decrease in the willingness to pay. So to me, this is really interesting. And I think about this like a bid ask table in the stock market, right? What you're seeing is your asking price isn't really decreasing, even though the market's decreasing, but the bid is decreasing and it's coming down towards that asking price. So in the fullness of time, the way that this cycle completes itself is we get to a market where properties do trade at 100% of asking price. And as those bids start to decrease, and that'll be, as rate locks start to expire, right? As the rate hikes start to push more and more buyers of the market, as we start to see more and more supply come into the market. And I'll return to one of the things that I said in February when I saw, like, I felt that I saw this exact phenomenon was coming, that underpricing expedites downward price discovery, right? If you have a low price, the seller doesn't have to reduce their price for the bids to start coming down. All that has to happen is the buyers have to be willing to pay less. And we know materially that the buyers, not only, it doesn't even matter if they're willing to pay less, they're in most cases, they can only pay less because of the capital cost increasing. That's how you see prices come down in a very efficient way, right? Now, the next thing, and this is what we saw in February and March, if you return to those two market reports, prices were coming down before volume was even going up, right? And you and I talked about a couple of different ways that we can start looking at how the volume impact will take hold, because there are volume indicators that are just ramping up right now that will actually, that are proven to be leading indicators of further price decline. So I think that, when we look at sales to new listings ratio, so the percentage of sales, the percentage of new listings that is selling, that's an absorption metric, right? So I think, if you and I can collaborate on a chart like that, that's a big one. And then the months of inventory, right? Which we're still just waiting for the data to come in on. But once you start to look at these things, it'll show you that this is far from over. And we might have seen a pretty steep decline leading into it, and it might trade sideways for a little bit, but there are probably further price declines ahead of us.
Yeah. And, there's a number of things that can obviously cause price declines. Purchasing power being reduced is a big one. Another one, is a flood of new listings, and we haven't seen that yet, right?
Right.
If we look at 2022 listings, so in February, it was about in line with the past couple of years. In March was below, April below, and May again quite far below the past few years.
Yeah.
So we haven't seen that supply flood that should typically ease the market.
Right. Yeah, no, for sure. And I think that, it looked like that might have started almost in a 2017 fashion kind of ramped up with a lot of opportunistic selling. You were starting to see a lot of opportunistic selling, and then the rate hikes just kind of stopped it dead in the tracks as the prices started to come down. So a lot of people who were thinking about maybe timing the market and exiting might have said, you know what, I guess I'm not getting 2 million for my house here, so I might just call it a day, or I'm just going to sit tight and see what happens with the market or whatever, right? But then if you look at this, I think you have this same chart with sales too, right? Where we can compare that seasonality of sales. Because I think that, examining the sales volume based on a year over year, it kind of shows like, that prices are, as much as we've seen a little bit of a decline, prices are probably still being propped up. And this is a story you heard for the past 2 years, right? Prices are probably still being propped up by low inventory, right? If you're still seeing a bit of excess demand, right? And so it's just the capital cost that's bringing that price down so far. I think that it's only a matter of time before inventory kind of sorts itself out. We're starting to see the number of sales decrease, right? And I do have that one as well. I think that was the one that we looked at prior to recording, right? The sales volume year over year.
Click the wrong one there.
No, it's all good. No, that actually was that was the right one, because you did. Yeah, there it is. Yeah, so because like the number of sales is probably really the thing that we want to be watching right now, right?
And just as caveat, we're missing 2 days for May here, so it'll be slightly higher than this number, but you can see significant drop off compared to the past 2 years.
I mean, I can't see there being enough sales to pop that line to the top of the chart, right? So I think that, to me, this is how new listings is one of the big indicators of volume, but it's how many total listings, right, on any given day, because new listings are new supply. But now that we're starting to see new supply fail to sell, bidding wars are failing, maybe doubling your days on market, for those bidding war type products. Over time, all of that supply starts to compound, and then you end up in a balanced market, or then you end up in a buyer's market. And as soon as you get to 3 months of inventory, you start to see that volume driven price decline, because buyers have product that they can go shop around on, right? They're not just going to buy they're not throwing the best offer that they have at the 1 or 2 properties that are on the market, because there's 20 or 30 that they can go shop around and be picky and get home inspections and, put in low ball offers. And that's the next phase of what's happening. I'll call it right now. Like that's what our market will look like by the end of the year.
Yeah, well, it's a good reason to keep checking in each month. We'll obviously be posting the latest stats, and Dan will, as always, provide his industry expertise here. So thanks for taking the time, and it's good chatting.
Yeah, likewise. Pleasure was all mine. And I guess we'll circle back in a couple of days to do the national report as well.
Yeah, that'll be coming out around June 15th. Expecting a lot of changes in different geographies across Canada, really, right? So it'll be an interesting one.
Yeah, I've started posting these on TikTok as well, and a lot of people are asking me about to show me what Niagara looks like, show me what and so I'm interested to see if we're starting to see that rolling over happening, because I think some of the charts that I posted, and that's your guys' public tool as well. So, but yeah, some you're starting to see some rolling over in some of those more inflated markets. So interested to see what the May data looks like.
Yeah.
All right, man.
We'll chat soon.